Professor Pravin Krishna, Distinguished Professor of International Economics and Business at Johns Hopkins University, joins us to talk through some of the headline themes in Indo-US trade ahead of Donald Trump's visit to India. Thanks for your time, Professor.
Thanks very much. Happy to be on.
So, Professor, I'll start with this. No matter what happens to the Indo-US trade deal, when it happens, etc., the layers that hide underneath a headline like that run into hundreds of subcategories, I would imagine. I can list quite a few off the top of my head: tariffs, agri-products, IP rights, investment barriers, etc. But I'd like you to unpack the term US-India trade for our audience, because this is what you do, right?
Yes, and that's an excellent place to start. I mean, broadly, what we're talking about when we say US-India trade is we're talking about trade in goods and trade in services. And before we proceed, let me just put a few numbers on the table to put this kind of the size of this relationship and the magnitude of this relationship in perspective. So India, on an annual basis, exports about $55 billion worth of goods to the US, and it imports about $35 billion worth of goods from the US. So there's a kind of a trade deficit, a surplus in favor of India, and a deficit from a US perspective of about $20 billion. On the services side, India has about $30 billion worth of exports, which are mostly IT and various types of tech services. And these are fairly evenly matched. So the US is about 25 billion. So India has a surplus of about 5 billion there. And so the total surplus, if you add up kind of goods and services, India has about $25 billion in surplus to the US. And this is, 1 point of contention for the US, but that's roughly the size of the economic relationship. To put this in perspective against, something else like US-China trade is also instructive, right? When you look at how much the China exports to the US, it has exports of about $550 billion to the US, right? So it's several multiples of what India is exporting. It imports about 100 billion plus from the US. And so the trade deficit of the Chinese relative to India is about 400 billion in favor of the Chinese. So when the US looks at China, when the US looks at India in the context of things like trade wars and trade negotiations that we're hearing about, India is, it's a sizable number, $25 billion, but considerably smaller than what has preoccupied a lot of people in Washington, which is the US-China trade relationship.
Okay. In the context of the recent trade escalations from somewhere around 2018, tell us how you would explain GSP, or Generalized System of Preferences, and what are those steel and aluminum tariffs that everyone is talking about?
Okay, those are excellent questions. So you pointed out to two of the main issues, actions from the US side that have created some anxiety in the relationship between the US and India. Okay? The first of these is the steel and aluminum tariff. So once the Trump administration came to power, one of the first things they did on the trade front was to put in place tariffs on steel and aluminum imports from a lot of countries, right? So there were tariffs on China, there were tariffs on South Korea, the European Union, and so forth. And some part of this, kind of the broader set of tariffs on steel and aluminum products, the Trump administration put about a 25% tariff on US imports of steel from India, which is about $700 million worth, and about, I think, 12% or something in that range on aluminum products, which are about $350 to $400 million worth. So roughly $1 billion worth, 1.2 billion worth of US imports from India of steel and aluminum were affected by these steel and aluminum tariffs, right? These were tariffs that were above what had been previously negotiated by the US, on a multilateral basis with all of these countries. And so it was seen as a kind of a trade aggression from an Indian perspective. In response to these trade tariffs that were imposed by the Trump administration, India announced that it would retaliate against these by imposing tariffs on some equivalent amount, roughly $1.4 billion. India said it would target $1.4 billion worth of American exports to India, right? And it took some time to do it. It said it would do it first, and then it delayed the implementation, then delayed the implementation again. And finally, I think roughly June, July 2019, I understand that these tariffs were kind of put in place and roughly at the same rate. So you're thinking about roughly 20 to 25% tariffs on about $1 billion worth of trade, which is about $250 million, right? So that's the range of the retaliation by India. And the steel tariffs by the US and the tariffs by India are still, the retaliatory tariffs by India are still, in a sense, hanging over this relationship. So that's one piece, and that's something for these countries to discuss and resolve in some manner or the other. The second important piece is what you refer to correctly as the GSP, which is the generalized system of preferences. Now, what the generalized system of preferences is, it's a mechanism, if you will, through which the US permits certain developing countries, or all of the developing countries of the world, to export certain goods to the US on a duty-free basis. Okay, so all of the Indian exports to the US, roughly about $5.5, $5.6, $5.7 billion worth of Indian exports to the US enter the US on a duty-free basis. And that's kind of an ongoing process, been going on for years. Now, the US took a look at this trade inflow coming from India and started to make certain claims about India's non-market behavior, right? So they said on US exports to India of things like medical devices and of US exports to India like dairy products and milk and so forth, that India was not behaving like a competitive market. And one of the criteria for you to qualify for GSP, the system of preferences, is that the US government has to certify that you are a kind of a market player. And so using these contexts, which is the medical devices, a little bit some discussion about intellectual property rights, a bit of discussion about dairy, US essentially said India is not playing like a kind of a market player, and therefore we're withdrawing the GSP. Okay, so the effect of the withdrawal of the GSP is essentially about $5 billion, $5.5 billion worth of trade. But one should keep in mind that when that preference has been withdrawn from India, meaning now India has to pay tariffs, Indians have to pay the import has to be, a tariff has to be paid on it. That tariff is about 5%, 3 to 5% range, right? So even though the trade volume is about $5 billion or whatever it is, $5.5 billion, taxes that are paid on those are only 3% of that, or maybe 4% of that. So something closer to $150, $200 million, which is a much smaller amount. And furthermore, those tariffs are not paid by Indians. They're paid by whoever's importing in the US from India, okay? Nevertheless, it causes some, price distortions, puts some demand pressure on Indian exporters and so forth. So that's the other big piece that's out there, which is, U.S. kind of withdrawal of GSP preferences to India on a range of goods that it was admitting previously on a duty-free basis. And this is something that the Indians now want to discuss as well with the U.S. government.
Okay, so from what you tell me, I get that, but I also know that this is not peculiar to India. I mean, just before talking to you, I was going through the long laundry list of what USTR says about the rest of the world in terms of trade. So they have problems with pretty much many countries in Southeast Asia. So given that context, how do you suggest commoners, news consumers, understand the elusive nature of a trade deal?
First of all, in the context of any economic relationship, especially economic relationship between countries and so forth, some type of dispute along these lines, some controversies, some tensions, anxieties this is just a fact of life. These keep happening. They've happened hundreds of times in the past. They're going to continue to happen regardless of whether a trade deal is achieved or not. Okay. The only thing that's slightly different today is that the Trump administration has taken a more aggressive position on international trade and has set aside its kind of geopolitical calculations to some extent, meaning they're not really looking at is India a friend or a foe, or is Mexico a neighbor or not a neighbor. They've really set there's a set of trade issues that we want to discuss, and whether you're a friend or not a friend, we're going to table our issues, we're going to have some questions for you, and we're going to deal with this on this basis, right? So this is something, by and large, I would say for people on the street to say, is there some war going on? No, very much this is kind of part and parcel of any kind of economic engagement with other countries, that disputes of this sort will arise, right? Now, as far as the resolution of the disputes, how does one resolve the trade disputes that have begun? Of course, it has to take place through discussion and negotiation on the one hand, bilaterally between countries. But let's also not forget that there is, in fact, a multilateral process, which is the World Trade Organization, which has certain rules of international trade. And we also, in principle, have recourse to the mechanisms of the World Trade Organization to resolve disputes. If countries are able to not resolve disputes between themselves through negotiation or conversations, one has the option of going to the WTO, which India has also gone to, which various other countries that that are the kind of the targets of Trump administration tariffs and so forth have also gone to. Now that's a slow process, but between direct discussions and the WTO pressure and the fact that there's kind of retaliatory possibilities as well, including the ones that India has also exercised, I imagine that some type of an understanding will be reached, at some point. That said, if an understanding is not reached, it's given the economic magnitudes of, the trade and the volumes that are affected and so forth. These are not kind of end of the world scenarios, right? These are manageable disputes. And I'm fairly confident that, after a couple of rounds of negotiation between India and the USTR over here, that there'll be, hopefully there'll be some kind of resolution, satisfactory resolution to these issues.
In terms of power balance, when there are two sides to any negotiation, there is one side which is slightly stronger, and then the amount of information you have at your command matters, and therefore the pie is decided. Who does a trade deal favor more in this case? Whenever that deal is reached, no matter how small or big, who does it help more in this situation?
In general, I would, it would be obvious that the larger, the more powerful country has a kind of a negotiation advantage, right? Simply because they're the bigger market, and by shutting off their market to you, that is essentially imposing a greater cost on you than you might impose on them. Okay. That said, I think in the Indian context, right? So actually, let me back up here. So in the context of the U.S. trade war or dispute with the Chinese, both sides were essentially trying to show their strength. The U.S. is saying, you depend much more on us in terms of who you need to export to, and then the Chinese effectively signaling through different mechanisms that they too are an important player, and the U.S. needs them as much as they need the U.S. and so forth. So some sort of jostling of this sort will take place. That said, I mean, I'm sure some of that dynamic will play itself out in the Indian context as well, which is a U.S.-India context. However, India is a powerful country in its own right. It has long experience in terms of negotiation with the U.S. and with the World Trade Organization. And by and large, India is not considered a country that rolls over easily in any of these discussions or negotiations. If anything, the reputation in Washington is of, India is a kind of a very, very tough and difficult negotiator. And so in this particular setting, given that the size of the dispute already is quite small, I would say, in puts it in the broader context, and given the fact that both India and kind of the US are fairly capable, very capable negotiators, on the margins, there may be some element of this kind of power dynamic sort of playing itself out a bit. But I have no doubt that the U.S. trade representative will represent in the U.S. very well, and that Indian negotiators will do the same thing for India.
Quick last question, Professor. You mentioned something now. I just wanted to pick up on that the size of the dispute itself is not very big. So would it be fair to say that the GSP suspension itself affected about little less than 6 billion worth of exports, and the tariffs, steel, aluminium, about 240 million? So would that be appropriate?
So and in fact, in a certain sense, the numbers are smaller than that, because on the 5.5 range of GSP exports of India to the US, first of all, the tariffs on that are only about 150 to 200 million, because the US tariffs on anybody, meaning if you did not come on a duty-free basis to the US, what you would be paying is US tariffs, and US tariffs are actually quite low. So we're talking about 3 to 5%. So the amount we're talking about already is quite small, and some portion of that is paid by Americans. I mean, the importer is the one who's paying the tax. So this number could be as small as, 100 billion, 150 billion dollars. People haven't done careful calculations, but it's something in that range. 150 on the lower end, 250 on the higher end. And in the grand scheme of things, $250 million here, 250 million in the context of the steel tariffs adds up to $500 million. It's a very small number.